Okay, team, so we are back with another video kind of recapping how we've been doing on Topstep's funded account program. Now, like we said in the last video, we did have to take our first reset out about a week ago, and really I'm not too disappointed in that, just because almost everybody that attempts this challenge to get funded is going to have to reset at least once, and that's a normal part of trading with Topstep. Topstep's the most legitimate funded account program in the world, and so it's certainly not easy to get funded, but if you're a solid enough trader over time, you should have a pretty good shot at it. And so you can see over the last week, it's been pretty slow and choppy. We have not had a lot of favorable price action, in my opinion. If you look back really over the last 3 weeks or so, especially at the opening bell and for the few hours that follow it, the market has been really stagnant, really choppy and neutral. A lot of fear, but a lot of mixed results. You know, a lot of blue chips have been going up in different sectors, and a lot of blue chips have been going down in different sectors. And what that usually shows is a choppy trend, you know, so especially in that first few minutes or those first few hours really after the opening bell, we've had a lot of neutral choppy action. We can identify this by looking at the volume weighted average price. You know, one of the reasons the VWAP is so powerful is because it shows you what the trend is. You know, if the stock maintains significantly over the volume weighted average price, then we're in an upward trend. If the stock, or in this case the futures contract, you know, stays underneath the volume weighted average price, then we're in a downward trend. Where the volume weighted average price becomes really useful is identifying when you shouldn't be trading. And again, if you look at the S&P 500, which is usually what I trade, over the last 3 weeks, especially the first 3 hours after the opening bell, we've mostly been neutral. You know, we have some big ranges sometimes, but we've been going up and then down and then up and then down. And you can see the volume weighted average price actually chops straight through that area, straight through the price action. Again, telling us we're in a neutral trend, and it's probably not the best time to trade. You know, a lot of traders misunderstand how it really is, and they just think that every day is going to be some great price action for trading. And maybe the price action is better for penny stocks or whatever, but in the futures market, specifically the S&P 500, we've had a lot of neutral trends, which just means that, you know, some sectors are doing great, some sectors aren't, or every sector is essentially just remaining sideways. Hopefully with the stuff that we have coming up, specifically we have the Fed minutes that just dropped that might influence volatility, as well as we have some stuff dropping next week. You know, it is a holiday week, and so volatility is going to be slower, but hopefully next week we can get some better volatility. But as you can see with my profit and loss, I'm not really down too much. We've been mostly trading pretty small during all of this. We're not pushing really hard in these days with really sloppy holiday hours and stuff like that. We're just taking it very slow and steady with this account until we get volatility, and then once we get volatility, that's when we'll scale up our size a little bit more. The plan, as always, guys, is to build up a cushion with smaller size and then take larger risks with the cushion that we have on the day. I think that's a very good system for getting funded in these funded account programs, and really that's what I'm going to be shooting for with this next, you know, funded account. As I'm going to build up a cushion, we are going to trade a little bit larger. The sizing I have changed to is at very minimum on normal days, not holiday days. On very minimum, I'm taking at least 3 contracts of the micro. You know, I think trading the regular E-mini is just a little bit too volatile for me if I'm trying to get funded in these accounts, and so I'm taking at least 3 to 5 contracts of the micro E-mini, scaling up, taking a little bit larger size with the micros, I think makes the most sense. But as always, guys, for your own personal trading, do whatever you can, do whatever suits your risk tolerance, because again, with these funded account programs, the goal is to be more aggressive. As you guys know, I trade a 30,000, 120K buying power account in stocks, and so I don't really need to get funded. It's really just a challenge that I'm doing with this funded account program to test myself, and ultimately I think these challenges make you a better trader. I think a lot of people get started in these challenges, and it really reinforces rules and a rule mindset with trading. It conditions you through repetition to do the correct things and to avoid risk, and I think that's really important, as well as being aggressive when you should be. And so hopefully at the end of this, I'll be a better trader. They are a sponsor of mine, and if you want to check them out, I'll include the link in the description of this video. Love you all. Y'all stay safe in the markets, and hopefully next week we'll get a little bit better trading hours. We'll see then. Stay safe. We'll see you guys next time.